How are you? Happy Monday. Wonderful week. Please give me some okay if you can hear me and if you can see the screen. Oops, hold on. I just clicked stop by mistake. Okay, the screen is back now. So, how was your weekend, guys? I hope you had some good time and you refilled yourself with some good energies. Thank you, Jake. We have finally full weekend of good weather. So yeah, it was great. Thanks, Jake. So we enjoyed it outside, yeah. Not so common in Canada, not so common. All right, so let's begin, guys. You should see the screen now. For all those of you who watched that for the first time, welcome to our family. Two things you have to pay attention to. This is the members area, so please make sure to watch the video tour to understand how you use the members area in your favor. And this is the trading report, the same report that you receive after the live trading room. The report, very important. Watch the video how to use and read the report correctly, and what you will want to do at your own comfort and your own pace. Watch these webinars. These are the most important webinars in our list to understand the terms we are using here: cycles, divergences, convergences, and so on. Okay, so watch that carefully in your own time, and below you will be able to find the table. This table would represent the summary of what we discuss in the live trading rooms. The idea is very simple. You click the image and you understand what are our expectations according to every single time frame. What do we expect from the pairs to happen? Okay, and below comments, explanation, a bit of a reminder of the discussed things in the live room. This is for your convenience, for your comfort, so you can always come back to the report, refer to that, and remind yourself what's the view. Now, very important thing, if the idea is bullish for every single pair or instrument, it does not mean we are buying for whatever the reason here, or better to say without any reason, just because the chart says so or whatever it is. The idea is you got the directions, the setups, the levels, the instructions, validation and invalidation, and you fit in to your trading strategies, methods, systems, robots, signals, whatever you work with. Okay, the idea is to prepare the directions, to choose the directions, and to work with them. So let's begin. We have pretty good list for today. The first one would be the euro versus the dollar. We are bullish on this pair with the break of this trend line. Both the short and the longer term were broken, and the main one, of course, pretty much on the same place. Then we got a retest here, a bullish hidden divergence. And the 4-hour chart verified our breakout of this trend line. And here we are, all the way up. This is the one I refer to, of course. Now, what's next for this pair? According to the weekly, we are trading the double cycle. And our zone, according to this cycle, is the 38.2 Fibonacci, which brings us towards 116 or so, 116.50. Okay. And generally speaking, as long as this trend line holds right now, the pair is under bullish pressure. Does that mean we would not be able to get any pullbacks before? Of course, we can get pullbacks. But the setup as we trade it is long-term buys. For all those who got involved with this trendline breakout I mentioned before on the 4-hour chart, this one, you have a good risk reward. It's a great place for management. Management could be partial cash out, stop loss to break even, trailing the stop loss, any of the combinations like partial cash out and stop loss to break even and so on. But the risk reward, the levels and so on provide a great opportunity for management. Here. So what's next? Where again the view remains bullish. Our invalidation plan is this trend line. As long as we are above, expectations are for continuation. Those who missed the train, don't try to jump in on a running train. Let it stop, let it provide an opportunity for you, a good setup for you with the strategies you work with, then apply the entry. Next one, same from the euros, we covered them all. First of all, the euro versus the kiwi. So we are bearish here, and here is why. According to the weekly, we currently are facing some hidden divergence, expecting some retraces downside, mainly on the daily, and something like that, and further on bullish run according to the higher time frame cycle. On a daily time frame, we have a triple cycle, which comes here, triple descending, false breakout, massive engulfing divergence in play. 4-hour chart verified each of the daily legs to be cycled by itself. That was the first leg, second leg, third leg. Each of them provided a cycle by itself. You can break it any way you would like to fit the levels, cycles, divergences. And a 4-hour chart provided us the convergence after the false breakout previous week. That was the false breakout. That was the place where we faced convergence. So our view was and remains bearish. Sell the rallies. Now I want to remind you, according to the daily cycle, we have this room of the levels. Let's measure the Fibonacci levels here. That's our magnet zone. Magnet zone is a meeting point of few cycles. So a first and the second zone. So theoretically speaking, we can still see the pair trying to climb here before it makes the move. But the levels, the divergences, the pressure, and the psychological zone, 172.50, and the one closer to 175, put the pressure, and that means we are after sells. Because the daily is the cycle, 4-hour is the one that we can expect the corrections to happen on. That could be 2 waves, or that could be a range. That's the 2 corrective cycles we are facing normally. This or other way around, it does not change our plan, which is looking for sell setups. So for the euro versus the kiwi, we are bearish, expecting 2 waves or a ranging correction. Rallies with bearish setups and evidences, candle patterns, divergences, trendline breakouts, lower lows, etc. Every good bearish evidence is a sell opportunity for us. Jose, potential bearish divergence on the euro-dollar daily chart. Potential, well, yes, it's a potential. We have no clue will that tick or not. That could be the one that will provide some kind of retrace. But again, according to the cycle, there is room to go. If the daily divergence completes with the 4-hour divergence as well, yes, it's time for cashing out. Okay, so the next pair on the list, Euro Aussie, pretty much like the Euro Kiwi. That's why we do not want overexposure. Let me remind you, what's the cycle we trade on the Euro versus the Kiwi, the Aussie, sorry. Sorry, Jose, you're very welcome. So this is a triple cycle we work with. Of course, you can measure that with any other structure that will fit in and will provide you divergences. Doesn't matter how you measure that, they all would remain the same. Okay, so really doesn't matter in that case. So the expectation are two waves, correction or a range. Any sort of, it could be triangle, it could be horizontal, but at that moment for us the plan is sell the rallies. Now this is the weekly chart, so the daily should fit in and provide the sells. So the daily did the beautiful rally in two waves, right to the level of 61.8 Fibonacci expansion. Beautiful cycle zone. First leg in terms of cycles provided us about 20 candles plus. The second leg was about 12. Great 1-to-2 ratio. Each of the legs from the daily chart is cycled by itself on the 4-hour chart. Right? Critical rule by the cycles. Okay? Can, of course, could again build it in different combos. It could be also special cycle here. Doesn't matter it how we name it. What matters is what it comes with. We got a false breakout and we got the convergence idea right here. That was the place of the false breakout. Then we got the second false breakout. Not two candles rule, but two waves rule. Two waves alternative. So false breakouts, convergence, sell the rallies. Now, according to the daily chart, we should expect two waves retrace down or range. Why or range? Because range is always one of the possibilities for corrective cycle. Okay, remember that, work with that. So the idea is exactly like with the Euro Kiwi, sell the rallies. Currently what we have is two waves. Break below that would be a great sign, and just of course one idea how to work with that trend and breakout. That's pretty much it for the Euro Aussie. Questions before I move on, guys? If there's any question about Euro Kiwi or Euro Aussie, let me know. Great. So let's continue. The Euro Pound is our next one. What do we have on this pair? Said, as I mentioned before, at the beginning of the live trading room, where do you enter the trade is totally based on the strategy you work with. If you want to work with any of the strategies I do, as suggested, the list of the webinars would help you to understand the strategies I apply. Convergences, false breakouts, trendline breakouts, all that would help you. Hidden divergences, yeah, all that would be available for you right here in this list. The strategy, how do you enter a chosen direction, is individual for every trader. Every trader works with something else he feels more comfortable with. Okay, if you have your strategies already, great. If not, that's the place where I suggest you start with a list of the webinars that give you ideas to work with. If you work with any system, apply the systems in the directions. But the first thing you always do is prepare your trading directions you are watching to trade. So it basically eliminates you from taking every single call, buy, sell, buy, sell, buy, sell, trying to chase the market. Okay. The next one, euro versus the pound. So what do we have on this pair? We have the long-term triple cycle coming in play here. Beautiful false breakout with the divergence. That means we expect two waves or a range. The way it structures right now looks like we are dancing here in a ranging correction. Yes, theoretically, of course, it still could be something like that for the longer run, but still long story. bend, almost bend-to-bend movement from the weekly chart showing a bearish hidden divergence, making the bearish pressure. The daily cycle is in a two waves structure with the bearish divergence. Psychological level takes us all the way up to 0.90. So theoretically, we could face the pair here dancing around this zone. But the direction to trade is for the sells. On the 4-hour chart, we got the beautiful two false breakout structure. We never went for lower lows yet. We did have the last trendline breakout in play, which is currently retesting. We don't have a trend on the 4-hour chart that will help us to enter a breakout. On the 1-hour, you do, and it comes this way. The best thing when the chart is not obvious, the best thing to do is to play more conservative. As I always mention and remind, when the market conditions are conservative, we can work a bit more aggressive. When the market conditions are more aggressive, we have to be more conservative in our actions. In that case, because we did not create lower lows yet, only trendline breakout. We do not have the bearish structure of 3 lower highs, lower lows to identify a bearish trend. All that makes the euro pound a bit more aggressive. So the best way to work with that is wait for fake breakouts to happen and creation of lower lows, not just trendline breakout. Okay, guys, remember that the market conditions are more aggressive, work more conservative on your approach. So what do we want to do for the euro versus the pound? Looking for the sell setups. Yes, it could try and climb slightly higher. The correction might be two waves. The correction could go and make a ranging structure as well. Due to the levels, the psychological zone of 0.90, the divergence combination from the daily and the weekly, and the way the 4-hour chart structures itself, the direction is sell the rallies with bearish evidences. So that's what we're looking to do. Euro versus the CAD, we have been riding our sell for a great run there. Just a reminder, this is the place where it all started for us, right here. So we got a beautiful ride all the way, and then previous week we are getting this. Two waves, sorry, and a divergence inside a bigger ranging correction. Immediate retrace up, which also spikes through this falling trend line, reaches the invalidation for the longer term sell. So EuroCAD moves to neutral from here. The long-term view remains bearish, and we will have to wait and fit in the weekly with the daily again, meaning the daily will have to finish this rally and provide the next further sell opportunity. At that moment, the daily and the weekly are in disagreement, lack of synchronization. Therefore, no more bearish view for the euro versus the CAD. Now I want to discuss about one very, very important thing. You hear me in the live meetings and in the Telegram channels. You always keep hearing me. Management, 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 right? Every single time when you start to see signs against you. and especially when you have a good run with a good risk reward. Do not let a great winner turn to be a loss. You got yourself a good risk reward. You got yourself some potential signs against you. Bottom of the bigger range. Two waves with potential. At that time it was potential. Divergence. Great risk reward. Manage your trade. Management could be partial cash out, trailing the stop loss, moving stop loss to break even. Everything works. But do not let a winner turn to be a loser. Why? Because sometimes in the market there are zigzag moves and there are V-shaped moves, V pattern, right? So you don't want to wake up and say, oh, I wish I would take the money. The market gives you the money. Tell thank you to the market. Apply management, whatever fits and suits your strategy you work with, but do not let a profit turn to be a sudden, unexpected loss. And things could go unexpected with the market sometimes. We all saw what happened previous week with USA in Iran. The fear of the attack, the fear of some action brings a lot of pressure on the oil. Canada related to the oil directly. We all saw the anti-movements from Powell and the expectations from the investors for a rate cuts in July. 1 + 1 equals normally 2. Of course, it's just a metaphor, right? You get the signs against you. Do not let a good winner turn to be a loser. Very, very important lesson, and I wanted to discuss about it in the EuroCAD, as this is classical example for a V-shape out of nowhere, technically speaking. You don't want to let a beautiful run and a beautiful winner surprise you. Okay? And the worst case you want to find in yourself in such situations is break even. Worst case. Best case, of course, profits. And then the last one of the euros is the euro versus the yen. What do we have with this pair? Trio in the weekly. Again, divergence in play. Daily double bottom. Beautiful engulfing in play. Our expectations for correction. Correction could be two waves or range. This or other way around. The pair becomes bullish. This pair also was covered in the weekly forecast, which was shared with you yesterday. No, 2 days ago. Yeah, Saturday? Yeah, Saturday. I uploaded that. Hopefully you watched that. So our expectations are for two waves up or a range, meaning we can see that going and doing anything like that or dancing inside any range. But this or other way around, bullish evidences are the ones that should provide a bullish opportunity. What's bullish evidence? For example, bullish divergence with a bullish false breakout, trendline breakout, higher highs. Just for example, yeah, from the techniques I work with, and so on. Okay? So the euro yen, I say no more. It's nothing else to be mentioned, of course, at that moment. We will be paying attention to the daily cycle first of all, levels. That's the zone we want to see it climbing to. And if the momentum will remain bullish, then we will be, then we will be trading that as a weekly cycle, meaning towards the weekly levels here. Too early to judge. Both cycles in play. We will start with the first one, the euro yen on a daily chart. And again, the sequence of the things lead us for the bullish direction here. Questions about the euros, guys? The euros continuously for several weeks now provide us the bullish, the biggest list of the trading opportunities. Some of them to the upside, some to the downside, but the list is beautiful. Now, question I've been asked on Friday, I think, Vlad, how come some of the euros are bearish, some are bullish? Guys, my approach is, even though the term of correlation exists Of course, it has its periods as well. Of course, it's there, it works, but it's not absolute. You cannot blindly rely on that. And there is no such thing. If the euro dollar goes up, then the euro pound will go down, or the vice versa, or dollar franc will go down and vice versa. If that would be the case, we all would be billionaires and the trading would be extremely easy. If the euro up, pound up, and dollar franc down, it would be so easy. It doesn't exist in 100% of the times. And most of the times the traders try to do work with that fail. So do not blindly rely on correlation. It's good, it could be helpful, but it's not the absolute only thing you want to rely on. So some of the pairs, because that's why the crosses exist, because there is no full correlation. That's why crosses move. Okay? Some crosses could go up, some crosses could go down. And remember, in Forex, the beautiful part of Forex is it's always currency versus currency, economy versus economy, and not just value of a paper, like a stock. Okay? For the question, what's my email for questions? So first of all, you can contact me on Telegram. The second thing, my email, if it's for trading questions, that's my email, guys, if you need me for anything. Okay? And if you need my supporting for any help, Traders Academy Club.com. All right? Perfecto. So let's continue. Pound dollar is our next pair. Now we are into the pound. What do we have for the pound? According to the weekly, we are at the bottom of the range. A big reminder here of this triple cycle, double cycle, false break, temporary range. What's going to happen for the long term? Are we going to break up or are we going to break down? We have no idea. But the bottom of the line is, as a matter of fact, right now we are at the bottom of this range. If it's a ranging pattern, then this movement has to be cycled by itself on the lower time frame. Watching on a lower time frame, we can see a classical trio. Beautiful divergence in play, great false breakout in play, and beautiful candle pattern, 3 white soldiers. I also shared with you a separate video for that once it created in the YouTube channel and published among the Telegram channels as well. So what's next for this pair? We are breaking the falling trend line, expecting a correction to the upside in 2 waves or a range. So the view for the pound dollar is bullish. Yes, short-term retraces could happen, but we are after buy setups. That's for the pound versus the dollar. Invalidation, of course, at that moment, as we do not have other swing points to rely on, is the most recent low. This is the invalidation for the bullish plan. Next one on the list is the pound versus the Aussie. We are looking to trade the sell for the long term in a bearish view, expecting 2 waves correction or a range on a daily time frame. In other words, 1, 2 or range. Currently, assuming we are getting ready for the second leg down, 4-hour chart is the one that provides us the 2 waves, and this is our trend line. Going below that would be a good sign to start looking for sell the rallies on the lower time frame to improve yourself a risk reward, assuming and expecting for that to continue lower. That's under the assumption the second leg is about to develop itself until this part completes. So pound versus the Aussie, we are after sells. Trend line invalidation would be a good sign. Trend line breakout validation would be a good sign for this pair. And the last one of the pounds would be the pound versus the Canadian. what do we have for this pair? 61.8 of the weekly double cycle. No divergence currently clearly in play, even though it's potential divergence to form. And because it's just a potential, we can't rely on that for the long term. As for now, the daily approves this leg as a cycle by itself. Sorry, this is the breakout. Now we don't here. Sorry, we don't have a clear divergence from the first point to the last point, as this is crossing the middle line. We don't have two candles in play in this movement. So what do we have here? Basically, the only thing we can work with is the two waves retrace as alternative to the two candles rule. That's the only thing we have. Divergence in play in these lows. Psychological level 165 is very, very close to the play. We have also false breakout of the psychological 167.50, but the main factors I love is the fact that in this channel upside, the most recent lows were cleared. Where's my pen? Here. This low and this low, they both were cleared. Why it's so critical? A lot of stop loss orders are located on such levels of traders who are early buyers, those who buy here, 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 or here. Those who just buy without any specific reason. The daily chart provided a beautiful engulfing pattern here with the levels, the divergence, the cycle. The idea would be looking for the buy setups. 4-hour chart provides also the last divergence, of course, and it's well in play here. No convergences yet. We ideally want to see the pair climbing, making the highs, but the expectations are right now for some pullback. Two waves or a range, but buy drops, buy bottoms would be a good plan. Can we see it trying to make one more false breakout? The answer is yes, no problems with that. The expectations are looking for bullish setups and trading. Now, can we trade a trend and breakout, for example, when this one comes in play? The answer is yes. We did have the second false break in a row. For more conservative approach, we do want to see higher highs in play. This or other way around, the pair is now under bullish pressure, and looking for buy retraces is the right thing to do currently. So this is for the pounds. Now, sorry, moving to the Australians and the Pacifics, Aussie versus the Kiwi, a pair that we have been watching for. We got this most recent big trend line broken, but it cleared the level before, so we are still under neutral view. For the long term, we would be looking for the next buys to come and play, but we want to see the signs for that. At that moment, there are no signs, so Aussie Kiwi, which we had previous week in our watch list, is still currently would remain neutral for us. And the one that comes in play is the Aussie versus the Canadian. Let me discuss with you about what do we have there. 61.8 is the level of this cycle, and the 100 is the level of this cycle. Both are in play. The divergence is there, histogram and moving averages, and the 4-hour has a cycle by itself on each of the daily legs. So what happens currently, we had a false breakout at that place, and then one horizontal false breakout, one alternative trendline false breakout. Both came in play. falling trend line breakout makes it valid correction, more aggressive. Of course, for more conservative approach, we would want it to see making higher highs and then the correction deeper. So what we want to see is rallies. This is a morning star candle pattern. We have it very close to the psychological zone of 090, and again, very good follow of the things here. The expectations, bullish correction, two waves or some sort of a range. Aussie CAD, bullish for us. New Zealandian versus the Canadian is our next one. We were riding a beautiful drop on the weekly. Now we do need to pay attention to the daily triple cycle. Game over at that moment for the long-term sells. Also good place for some cash out. Triple cycle on a daily time frame, 4-hour chart verification on each of the legs. 4-hour chart provides us again with the false breakout. Horizontals and trend line divergence in play. Falling trend line, both last trend lines are broken. This is the high for more conservative approach to be broken. We expect a corrective cycle to come in play. New Zealandian CAD, short term, bullish idea, expecting corrective cycle. Corrective cycle could be two waves, corrective cycle could be a range. But buy setups with bullish evidences is what we will want to see here. And the last one of the New Zealandians is the New Zealandian versus the dollar. So after zigzags for a couple of weeks, this area still holds as kind of a double bottom, or at least a good supportive area. The daily chart at the end turned to be double bottom with the divergence by itself. We did not break above the falling trend line yet, but the good interesting part as it structures itself right now is triple higher highs, higher lows. This is a very good structure which majority of time represents some sort of a bullish reversal. So we would expect some further rally, corrections, and continuation to the upside. Levels to pay attention to for possible reversal, and we mark the levels for that. We have two classical zones, 66.50 and 67. One of these areas very likely would provide some kind of corrections and then further expectations to the upside. Okay, now the dollar pairs. Let's go and check them out. What do we have on them? So dollar CAD, which was one of our best setup from previous week with this bearish hidden divergence, came in a monster sell. What's next for this pair? No signs for a stoppage. According to weekly, we have also much further way to go down, 130 psychological level or even on 28.50. Nothing against on the higher time frame, so sell the rallies would be still the plan for us with further expectations to the move down. Dollar franc was another monster trade for us. We are bearish since the break of this trend line. Just a reminder once again, where do you find that? In the reports. And this is a summary to what we discuss here and now. What's next for this pair? Right now, it's coming to 50% of the weekly triple cycle, which was our target. So a big V on this pair and a great cash out. What's next for this pair? Even though currently there are no signs again, so it could continue lower, reaching the target, my approach is taking the money. It was a beautiful payout, paycheck, call it as you want, and game over. As for now, I move neutral on the dollar franc due to the levels that were achieved. For those of you who still want to ride, then watch until the daily would turn to be divergence. That would be the final cash out. And the dollar versus the yen, another pair that we are running with ourselves, with the break of this trend line once again. So what's with this pair since then? Running, I would expect it to go a bit further down, closer to 106, 105 zone. Why specifically this zone? Because this is where we get our magnets. Once again, the magnet zone, magnet level, is where we see different cycles bringing us to the same place. So we have one here, one here. Now, we do not have the ending part on this level yet from the lower time frame. So two things could happen. Thing number one is slow down like this, divergence, and then game over. We will say V, game over. The best scenario would be an extended move here, like this, starting to create false breakout. Of course, this will have to be divergence, and then trend line breakout. Happened, classical, we are cashing out, and we will be looking for the buys. Did not happen, we remain bearish. Nothing against from the weekly that turned bullish, therefore further continuation down is expected. So the rallies is still the plan. For all those of you who are involved, of course, just enjoy the ride. And remember, make sure a winner that you have in your hands, no way you'd let it turn to be a sudden loss if the market decides to turn around. And the cut franc, which we had on our list, it's basically not new, just a reminder. We had the breakout, it fell to hold, so this trade failed for us. Nothing new since, so the cut franc remains neutral at that moment. Looking forward for this divergence to come in play. It's too early, it's not there yet, so we are neutral as for now. And we are into the commodities as for now. Gold and silver were still bullish. That was the last place we got involved with a bullish hidden divergence. And riding. How far? We are approaching to the critical zone and target 50% from our massive cycle from the monthly, and this is the destination where I expected. The weekly cycle fits in by bringing this magnet zone in play. So 14, 50 and slightly higher, that's where I expect the gold to finish. Meanwhile, holding the buys, of course, enjoying this massive rally that we had right from here. For those of you who ride all the way from this place, the double bottom and the trend line breakout divergence, it's even better. But for those who joined late, it was right here. Enjoy the ride. Silver, same story, nothing different. One thing to pay attention to, we are currently on 50% of the triple cycle. Great place for partial cash out, and I say partial because according to the long-term cycle, we might be flying here. That's why it's only partial. Okay, for the silver, and the idea remains, of course, bullish. And the last commodity we have involved with, where is that? Coffee. Here we are here in the investment trade. Those who entered the trendline breakout, those who entered the retrace after that, at the 98, our buy remains in play. And the last one, it belongs to the Ripple. Velislav, this is for you. The two waves and the breakout, that was the last one where we got it involved. Then we got this opportunity again, it was previous week. So riding, what's my personal view, of course, remains still bullish. However, I see already good place for some cash outs due to the fact that two time frames show signs against. Okay, we have the slowdown, and it's a good place to make sure we take partials. For the long term, I would never, when it comes to cryptos, I would never cash out full positions just because ripples could, cryptos in general, could fly out of nowhere and pay huge risk rewards. So I would not cash out ever full position. 70-80%, yes, always leaving some of the position for the possibility of a straight fly, skyrocket. That could happen. So my view remains bullish. However, we do have some cash out zone already. For the oil, to be completely transparent, I don't have a clear view on oil for one reason. It does not fit in any cycle combo, weekly with daily or daily with 4 hour. Personally, I think it's to the upside. I don't have included in the reports for one reason. It is building up some sort of trio here. If we get in double cycle correction and two waves, or at least a good hidden divergence and breakout, it would be bullish in the report. Currently, there is nothing there. My personal expectations are retraces and buys, but there is no matching in the cycles. That's why I don't have it right now in the report. This is my personal view for the oil. And again, it's too sensitive with all the fundamental things going around it right now. Remember the G20 by weekend, so a lot of discussion, words, speculations to be heard by then. Good. Guys, any questions? I just want to remind you, for all those of you who are here for the first time with us, we have our Telegram channels. If you are not in yet, when you joined, you got the links to join us. If you did not receive it by your email, please contact the support team and they will assist you in joining to our Telegram channels. That's the place for you to ask all the questions about the live trading room, the techniques we work with, and anything there, to meet the other traders, to see what other traders haven't shared. We have several very experienced guys there, and that's pretty much it. So thank you very much for your time, guys. Sai, thank you, and I wish you a wonderful week, guys. I'll see you on Telegram later on, and we'll send you the trading report as soon as it's ready. Take care and a wonderful week to you.